Ladies and gentlemen, my name is Greg Michalowski. Today's date is August 27, 2014. This is a daily Forex report. It was a quiet day in the foreign exchange market. The dollar, though, corrected. We saw the dollar get weaker after being stronger over the near term. But one of the currency pairs that was on fire here today was the Canadian dollar, rallying against all the major currency pairs. Let's take a look at that in our daily report. Before we get started, however, let me remind everybody that if you like this video and want to see more of them, you can just subscribe to my YouTube channel by clicking this button right here. For other information about foreign exchange trading and the markets in general, visit my website at GregMikeFX. Follow me on Twitter, GregMikeFX as well, and you can put in your email address here, and I'll be sure to stay in touch with you going forward. Now let's take a look at the Canadian dollar and see what it did against all the major currency pairs here today. And this series of graphs, if you will, orders the strongest to weakest currency currencies, and it does it by looking at the daily change of each currency versus the other major currencies that trade around the globe. So for instance, if you take a look at the Canadian dollar right in this box right here, it is risen against all the major currency pairs here today. It takes the close from yesterday, takes the current price, and figures out the percentage change versus the dollar, the euro, the pound sterling, the yen, the Swiss franc, the Aussie dollar, and the New Zealand dollar. And it shows those values right here. When you add up all these values, it equals the 423 up here. And I do that for all the major currencies, taking a look at the change versus each other, and then add up the numbers, and it then gives me a cumulative or a rank by accumulating all those percentage changes. So if you take a look at the Canadian dollar currencies, Canadian dollar is up against all the major currency pairs. It totals 423. If you take a look at the US dollar, which I said was corrective in trading here today, the dollar fell against all the major currencies, including minus 0.87% against the Canadian dollar. You see how these are equal and opposite right here. So if one goes up, the other one goes down, and that's what the graphs show. So if you accumulate all the change in the US dollar, you get a minus 2.66, and that ranks as the lowest number here. So that's what this graph shows, but the focus here is on the Canadian dollar, how it rallied against all the major currencies. Now let's see what the charts were telling us. And so if we take a look at the daily chart in the dollar versus Canada as an example, we have a nice little trend line here that connects different lows along the way. And the market in trading yesterday came close to that trend line, but today we fell through that trend line around the 109.33 level. That's where the momentum started to move to the downside. And in the process here, on the daily chart at least, we fell through the 200-day moving average. We fell through the 100-day moving average, the blue line in this chart. The green line represents the 200-day moving average. We fell through the 38.2% retracement of the move up from the low in July to the high that we saw in August at the 108.52 level, and moved on down to our low price for the day, which came in at the 108.27 level. We're currently retraced back up to where the 100-day moving average is, where the 38.2% retracement is. We're actually above that, above those, or right near the 100-day moving average, but above the 38.2. So we're back testing levels that we broke through on the downside. But the trend got its start back here, where the market fell below the trend line at 109.33. Now let's take a look at the hourly chart, and let's put a little horizontal line at the 109.33 level. Remember, that level was the where the trend line came across right here, 109.33. Now if we take a look at the hourly chart here at the 109.33, what line do we see coming in right here at that level? That's the 200-hour moving average. We're on the hourly chart. The green line represents the 200-hour moving average. We fell below that 200-hour moving average, closed below that trend line and the 200-hour moving average. And in the next bar, we came right up to that 33 level right here and that's where things started to unwind to the downside. So from a technical perspective, sellers were leaning against the trend line, leaning against the 200-hour moving average. Good traders, traders who are interested in their risk, will look to use technical levels to define and limit their risk. And that was one of the themes here in the Canadian dollar, was technical selling against key technical levels. Note here, the day before today, or yesterday's trade, note how the 100-hour moving average and this trend line became levels that the market leaned against as well. So when the market fell and closed below the trend line here, and below the 100-hour moving average, we stayed below that level, and the market sold off to the 200, to the trend line, and fell below that. From that point we fell below the 50%, we fell below the 61.8% retracement level, and then we came down to this green line right here. And if I put my cursor on there, that line says the 200-day moving average. 108.84 is where the 200-day moving average comes in. And note here how the market stalled at near that level. We came down to it here, we moved a little bit up, we came down to it here, moved a little bit up, we came down to it here, moved a little bit up, and we spent about 8 or so hours trading above the 200-day moving average. I thought that would be a level that the market would bounce off of, that the market would find support and move higher. And other traders thought the same thing. Why? Because they can define their risk and limit their risk against that area, against that moving average level. And so when we look at the daily chart right here, we don't see that support on the daily chart, but off the hourly chart, traders who know that 200-day moving average is there were buying against it, buying against it, buying against it. Were they getting any satisfaction on the move to the upside? The answer is no. The market could not sustain any rally, could not get back above the 109.11 level, which was the broken 61.8% retracement level. And so when the market can't go higher and it breaks below a technical level like the 200-day moving average, what happened next? Boom. Straight to the downside. That momentum to the downside didn't stop until we hit the low, and now we're rebounding back to the upside. Let's take a look at one more chart, the 5-minute chart. And what I want to do is focus on here at the 108.84 level, where the 200-day moving average is. And if you look at the 5-minute chart and we look at the 109.84 level, that's this green line right here. Look how the market came down to it, found support. Came down to it, found support. Came up to the 100-bar moving average on the 5-minute chart, and what do we start to find here? Resistance against the 100-bar moving average. In fact, the last 2 tests of the 100-bar moving average, what did we do? Found sellers, found sellers. We're still finding buyers against the 200, but the market is starting to coil in this area right here. It's starting to say, okay, either we're going to go higher or we're going to go lower. And when the market fell below the 200-day moving average here, what happened? Market sold off, sold off, sold off, sold off, and over the next hour, hour and a half, the market just continued to find sellers, sellers, sellers through the 100-day moving average all the way down to our low at the 102.27 level. Since that time, we're backing up. We're now in the what I call a correction zone of the last leg to the downside, the last trend move to the downside. This is where we should find resistance sellers. If the market moves above this level and then back above the 100-bar moving average, then I'm really confused with this with the dollar Canada. But then again, I didn't expect the Canadian dollar to get so strong in trading here today, and I don't think a lot of traders did as well. No real economic news, just as Burger King buying some donuts. So that's a look at the Canadian dollar and the dynamics of a trend type move, and why and explains why technical levels are so important for you to follow, especially the technical levels that the market follows, like trend lines, like Fibonacci retracement levels, and especially moving averages like the 100 and 200 bar moving average. Those are key technical levels that you can learn from and you can trade off of in order and try to limit your risk when you're wrong and make a lot of money when you're right, when the market starts to gap like it did in trading here today. All right, let's take a quick look at the euro versus US dollar and maybe a couple of other currency pairs before we go. The euro, I mentioned, had a little bit of a the dollar actually had a little bit of a sell-off today. Versus the euro, we were up on the day, but we stayed below the gap level from Friday. Friday's low came in at the 132.19, and we were not able to move back above that level. In fact, we went right up to the 38.2% retracement of this leg to the downside, found sellers against what has been old highs right here. This yellow area represents the gap from Friday's low to Monday and Tuesday's high, I guess, and haven't been able to get above that level. In overnight trading, if the market's able to move above the 38.2, above the 100-hour moving average, above the 19 level, we could see further upside. The one thing I will warn you, however, is that we do have German CPI tomorrow, supposed to come out unchanged, and then we have Eurozone CPI coming out on Friday. That is also supposed to be continue the weakness, with the year-on-year estimate for CPI being 0.3% versus 0.4%. Not bullish for the euro, and although we see a correction in the euro here today, we still, from a fundamental standpoint, I think traders are more inclined to think to the downside. The other thing of note here on the euro and a level to pay attention to is you see this trend line right here connecting a low, a low, a low. This is the hourly chart. We fell below that trend line in trading yesterday and stayed below it during the Asian session today. But then we moved back above it, and the low correction point right here found support against that old trend line. From there, we moved back up to the 38.2, but found resistance sellers there, and now we're in between. So watch this trend line down here. If we break back below that level, that would be an early signal that the market probably has some further momentum to the downside. In the pound versus US dollar, this currency pair gave us a head fake here. We moved strongly up through the day after reaching our bottom here, a double bottom down here from Monday's low, reached in trading here today. We moved above these bottoms from last week, that's Thursday and Friday, and we went up to the 100-hour moving average. From there we corrected, but then found support again, and then moved above the 100-hour moving average. At this top right here, where we have a low and we have a bunch of highs here, you see all these highs through here, the market actually moved above that area not only once, but twice, but 3 times, and each of the time the market moved above that level on its way to the 38, on its way to the 200, never got there. No momentum on this break right here, and that led to the correction back down to the 100-hour moving average. Now it's decision time here for the pound sterling. Do we move higher from here and move back up toward this 160, let's call it 166 area up here, or do we break below the 100-hour moving average and test this floor right here and test our floor right here? That's the question that's going to be answered in trading here tonight for the pound versus US dollar. And finally, for the dollar versus yen, another key trend line here was broken with the 100-hour moving average. Saw some momentum, not the momentum necessarily that you would expect on such a break where two technical levels are taken out at the same time. We did see the market come down and test yesterday's low and bounce back to the underside of this trend line. So we have resistance up here, we have the 100 there, and we have this double bottom down here. And at some point, perhaps over the next 24 hours, we're either going to see a break to the upside or a break to the downside. Once again, let me remind everybody that if you are interested in this video and want to see more of them, please subscribe on my YouTube channel. And for more information on the foreign exchange market, go to my website, Greg Mike FX. Quickly, the calendar is pretty full tomorrow. We do have that German CPI data coming out all through the day. It'll be released at 8 a.m. They give us the different regions of Germany, and then they accumulate it all up. It's supposed to show a 0.0% change, so unchanged on the month. We get Spanish flash CPI coming out at 3 a.m. We also get Swiss employment levels coming out at 3:15. German unemployment change supposed to show minus 6,000 decline, so less unemployed there. We get euros. We get the UK CBI realized sales supposed to rise to 27 from 21. That may be supportive to the pound. And then at 8:30, we're going to get the current account coming out of Canada. So fundamental news there that might be of interest to that Canadian dollar trade. And also we have the US GDP. This is another revision to the second quarter. Last time it was released, remember, we rose back up to 4% from, I think, 3% originally reported. Now it's expected to come down to 3.9 as they move closer and closer to the goalpost here of finalizing second quarter GDP. Unemployment claims, the weekly unemployment claims are supposed to remain around the 300,000 level, and U.S. pending home sales will come out at 10 a.m. A 0.6% gain is expected for that. That about does it for me. My name is Greg Michalowski. Hope you learned from my lesson on the Canadian dollar here today, and also got some key levels for some of the other major currency pairs. Good fortune with your trading. Any questions, you can always send me an email at gregmichalowski@gregmikefx.com. Bye-bye now.